our recordation taxes are taxes that the community pays when you take out a mortgage in order to purchase a new home. So as the real estate market ebbs and flows, those resources change, and so we have to make sure that the projects that we are planning over the 6-year period can be afforded given what is happening in the real estate market. And then last is the general obligation bond debt limits. So the county has been level funded in terms of the amount of debt that we are permitted to issue in a given year at $280 million for a very long time. And as the cost of capital improvements rises, we remain capped at that $280 million limit. So if you'll go to the next slide, this chart sort of illustrates what impact that limit on our debt issuance has had over time. So you can see in fiscal 2009, in the gray line at the bottom, we were issuing about $300 million. In fiscal 25, more than 15 years later, we're actually issuing less per year at $280 million. Over that same period, you can see in the top blue line that the cost of our capital improvement dollars has gone up. So what $300 million supported in fiscal 2009 to keep pace with inflation and the cost of construction, we would need to be issuing $500 million a year. So you can see clearly here that our money just is not going as far as it once did. Next slide. And so the county executive is very invested in making sure that our county is able to address these funding issues and provide the capital improvements that the community relies on in order to satisfy the needs of the community. And tax restructuring is a very important part of the county executive's vision in promoting that. Our tax structure is based on the realities of the 1950s and 1960s when Montgomery County was a bedroom community, and we are no longer that. And so we do have other neighboring local jurisdictions, particularly in Northern Virginia, that have found alternative taxing structures where the tax burden is shifted to the commercial real estate sector, and that allows those communities to make important investments in infrastructure, particularly in transportation, that spur economic growth and allow that community to move forward in terms of positive community investments while limiting the impact on residents. Next slide. And I'll leave you with this chart, which sort of shows how Montgomery County compares in terms of the residential and commercial property tax rates to other regional jurisdictions. So you can see on the far left-hand side, Montgomery County is there, and we have the same property tax rate for both residential and commercial properties. You'll see that it is not the same in the Virginia jurisdictions, where those entities can set higher property tax rates on commercial properties, particularly in Fairfax County. And you'll see a very dramatic example of that all the way to the right-hand side in Washington, D.C., where they have been able to keep their residential property tax rates very low, at significantly less than $1, while the commercial property taxes do the lion's share of supporting investments in that community. So that's some important context to understand what would be needed in order to really make substantial progress on the backlog of community pressures that we are facing in the development of the next capital improvement program. But if you'll move to the next slide. With that in mind, we want to hear from you. And so we will be moving into our breakout sessions where you will have an opportunity to meet with department representatives and ask your questions, as well as let us know what your priorities are as the county executive builds his next capital improvement program. that, Drew, did you have any final comments before we move into breakout sessions?
Thank you very, very much, Ms. Silverman. And we do encourage everyone to really take advantage of this opportunity to enroll in one of these sessions. And let's get everyone, engaged, and we'll hopefully get some very valuable information that could be very helpful in the next process in the development of our CIP programs. Thank you, Rachel. And again, we thank everyone for participating. It's time for us to break into the 5-6 sessions. The breakout session for education, environment, general services, parks, libraries, and transportation.